Well, good morning, ladies and gentlemen. I'm David Turner. I'm the chairman of the board of the bank, and I will chair today's meeting. On behalf of my fellow directors, it's a really great pleasure to welcome you to the 2016 Annual General Meeting of the Commonwealth Bank of Australia. I'd like to acknowledge the traditional owners of the land on which we're meeting today, the Noongar people of the Withdrew Nation. I respectfully acknowledge their elders, both past and present. I also acknowledge the emerging leaders of tomorrow and their contributions. Now, safety is viewed as a high priority at the bank, so I'll briefly outline the venue's safety procedures in the event of a fire or other emergency which necessitates an evacuation. In such an event, I will adjourn the meeting and ask everybody to follow the exit signs. Please follow all directions of the Convention Centre staff, who will be able to assist you should you need help. Listen for further instructions from the emergency public address system. It's 9:30, there's a quorum present, and I declare open the 2016 Annual General Meeting of the Commonwealth Bank. You should all have received a copy of the notice of meeting, and I'll take that as read. The meeting is being webcast, so I also welcome shareholders and others listening to the webcast. I would kindly ask you now to switch off or put on silent your mobile phone for the duration of the meeting. I'm sure you won't, but please don't take photographs, film, or record the meeting. Now, it's my pleasure to introduce your directors, the Chief Executive Officer, who's also a director, the Chief Financial Officer, and the Company Secretary. Seated at the table on my far right is David Craig, Chief Financial Officer, Ian Narev, Chief Executive Officer, and Taryn Morden, Company Secretary. In the front row of the auditorium are my fellow directors, who I will ask to stand as I call out their names. Lorna Inman, Kathryn Livingston, Andrew Mole, Mary Padbury, Wendy Stops, Harrison Young, Sheree Schacht, David Higgins, and Brian Long. I think we should have got a clap on his heart. I'm really sorry. Sir John Anderson can't be with us here today. He is very sorry and asked me to extend his apologies to you. Now, details of the directors' backgrounds and experiences are included in the annual report. Along with us today are members of the senior management team, and they will also be available to meet with you after this meeting is finished. Now, the agenda for today's meeting is as follows. Firstly, I'm going to talk to you fairly briefly about some general items. Ian is then going to follow me. Ian Narev is going to follow me. And then after Ian, we'll deal with the formal items of business as set out in the notice of meeting. Now, ladies and gentlemen, it really is a huge pleasure to be here in Perth for our annual general meeting. The Commonwealth Bank has been in business in this state for over 100 years, and of course Bank West started here in 1895, and we are both very, very committed to it. We're keenly interested in helping all of our customers to prosper and to develop. We've got more than 165 branches in the state, servicing communities from Cottesloe to Kalgoorlie and from Albany in the south to Kununurra in the far north of the state. And we are, of course, a very significant employer in Western Australia. We have more than 5,200 people working under both the CBA and the Bank West brands. Western Australia is also the home of 90,000 direct shareholders in the Commonwealth Bank. And we're also proud of the fact that the Commonwealth Bank is a group owned not by an elite group of investors, but by Australians from all walks of life. More than 800,000 Australians directly own shares in the Commonwealth Bank, and millions more indirectly through their superannuation funds. Now, I don't know if you noticed it on the video that showed a minute ago, but in September we marked our 25th anniversary since the public launch of the bank. And for those of you who may have participated in the float at the time, it's been a remarkable journey. And if you still own the shares, it's been a pretty profitable one. Now, it's been 7 years since I became chairman of the bank, and at the end of this year, I'm going to retire, and Kathryn Livingston, who you met a moment ago, is going to take over. It's been a tremendous honour chairing the Commonwealth Bank, and it's certainly been an exciting and a stimulating time. We appointed Ian as Chief Executive at the end of 2011, and under him, the management team has changed enormously. We've balanced a mix of youth and maturity, young people with both potential and great ability populate the executive team and the management of the bank as a whole. There's not the slightest doubt that this team has brought a new level of innovation, ingenuity, and energy to your bank. At the same time, we're absolutely focused on improving the culture in the broadest sense through our Vision and Values initiative. And we've also, during this time, had the customer absolutely at the heart of all that we do. Customer satisfaction is entrenched in our thought processes, and it has, of course, been an important ingredient in our reward system over the years. Now, over the past 10 years, we've not only moved from the bottom to the top in terms of customer satisfaction, but we've achieved excellent financial results, and they are, of course, entirely related. Now let me turn for a minute to the stability of the bank. It's an unspoken expectation that the Commonwealth Bank is solid and safe. An ever-present profile, its strength and its stability are all taken for granted. People see it just like gravity. It's always there. You don't go to sleep at night and expect to wake up in the morning slapped up against the ceiling. And here are 3 reasons why the bank remains so stable. First, it's because our strategy is set by the board and the executive for the long term, and that is how the bank is managed. Second, we have a highly professional management team and thousands of others who work their socks off to ensure that this state of affairs will continue for many years to come. And third, we fully understand that strength and stability also comes from the trust and support which our shareholders, our customers, and all of the community place in us. In recent times, this trust has been questioned, and a sense of mistrust has become entrenched in certain quarters of this community. People ask me if we're concerned about the nature of public debate. Of course we are. We're very concerned, always, about the nature of public debate, and we listen very, very carefully. And there's always the potential to undermine the confidence of the stability of the whole system which served this country so well. Perversely, we see this as an opportunity for the bank to redouble our efforts and to listen, and then to explain what we stand for, what we do, our purpose, and our performance. We employ 52,000 people directly, and thousands more provide services and goods which the bank uses on a day-to-day basis. And the whole business of the bank is to enhance the financial well-being of our customers, as well as the environment and the economy in which we all work. We lend money to families to buy houses, and to businesses to help them develop. And we safeguard people's money through helping them to invest, as well as to take deposits. And we've been in this business for over 100 years, and throughout all of that time, we've sought to compete energetically, develop the business, focus on customers, to be sure that they receive excellent service, and are delighted by the technology that we provide and they keep coming back. We're a bank that serves the whole of Australia. Now, our international subsidiaries are in New Zealand, Indonesia, China, Vietnam, and now in South Africa. Now, let's look quickly at some numbers, if we could. Last year, we had a revenue of $24.8 billion and costs of $11.7 billion. Many of these costs, as I said earlier, in addition to payroll, support and indirectly result in the employment of thousands of other Australians. The difference between the revenue and the costs is the profit before tax of $13.1 billion. Out of this, we pay $3.6 billion tax, the vast majority to the federal government, as well as to local and state governments. Whether you like the way governments spend the money or not, we're the largest taxpayer in Australia. After the tax has been paid, we have a profit of $9.5 billion, out of which 3/4, or 75%, or $7.2 billion, is paid by way of dividends directly to 800,000 Australian shareholders and indirectly through superannuation funds to millions of others. The remaining $2.3 billion is invested in the business to fund further growth through home and business lending, through the further development of technology, and an ongoing investment in the unrelenting focus on the needs of our customers. We are interwoven throughout Australian society, and we're part of a financial system here that is the envy of the world. All that being said, there are two issues over the past few years which have brought a considerable amount of scrutiny to our business. And these are past failings in our advice business, and more recently, a number of errors in customer cases in our insurance business. Let me comment on these. Firstly, on advice. The year has continued to see concerns and commentary about past issues in wealth management. And as I said previously, the issues have been both complex and challenging to identify and resolve quickly. However, once we did, we have tackled them with vigour and with determination. The Open Advice Review Programme invited all customers, about 350,000, who had received advice between 2003 and 2012 and felt aggrieved at the quality of that advice, to let us know. And about 8,600 requested reviews. We've had 500 people working on these reviews, and more than 7,100 of the requested reviews of 8,600 have now been assessed. In 80% of these cases, correct advice was found to have been given. And by the end of the year, we will have completed all of the remaining assessments. And this programme is populated with independent checks and balances. But probably the most important outcome of all of this is that the standards of education required of financial advisors in the bank have risen dramatically, and standards within the industry in general have also risen. In the course of this work, the team discovered other issues which included fees for service with no record of delivery. And this issue was one which we had identified through our review work and proactively reported to ASIC, the regulator, back in 2014. Since then, we've been working with the regulator to set up the right process to refund any customers who did not receive advice for their money. We're taking a very conservative approach to ensure that if there's any doubt about the customer getting service, we're just refunding the fees. We're going to work hard, we're going to work diligently on this issue, and we expect to have the refunds plus the interest plus everything else finished by mid-2017. It's a large number of refunds, and the amount is large too, about $100 million, but it does reflect a large number of customers, and it goes right back to 2007. But since we've discovered the problem, we've provided for this in our accounts, and the refunds have already started. Now, these have been difficult and complex issues to deal with. But what matters most is that we move quickly to do the right thing by the customer as fast as we possibly can, and we do it in an independent way as we can possibly manage. We work to put things right, and we work to put things right just as quickly as we can. And the executive leadership team have worked hard to find all these past problems and also to work in this process of putting them all right. Now let me just turn to ComInsure for a minute, if I might. In March, ComInsure was criticised in respect of 5 specific customer claims that were rejected or handled poorly by the company. They were tragic, and we have apologised unreservedly. Now, we've employed independent experts to review the business. DLA Piper, in terms of the allegations raised in the media, and Deloitte Touche Tohmatsu on the process and declined claims. And we know that some of our medical definitions were not up to date at that time, but we've since updated these. But with regard to the independent review to date, although they're not yet complete, nothing whatever has emerged that points to the systemic poor behaviour that was alleged. Nothing has emerged. Now, work is continuing within the bank and by the regulator, ASIC, and we're looking forward to all this work being completed in the appropriate time, and for us, the sooner the better. While it's inevitable that in a business as large and complex as the Commonwealth Bank there will be mistakes, our job is to keep them to the absolute minimum and put them right as fast as we possibly can, but our target must always be 0 mistakes. Now let me turn to initiatives to lift ethical standards and behaviour. In 2014, we introduced a vision and values programme into the group. Every employee of the group has been trained either face-to-face or in groups or in remote places online in vision, values, ethics, and how to behave. And we've also established a customer advocate function at the group level. And this function will ensure a more customer-centric focus across the bank. And this includes advocating for better customer outcomes, taking action where there's the potential for concerns to arise and where things have gone wrong. We're remediating customers in a consistent way, as you would expect. And we have an independently managed whistleblower policy, and whistleblower protection is central to how this function operates. Moving on to social responsibility, 5 years ago we were behind the other major banks in terms of our environmental reporting and processes. In certain areas we needed to do things differently, but in others all we needed to do was report publicly what we'd been doing already. Last November we disclosed the carbon profile of the emissions we finance. And this October a similar release shows a 10% reduction in comparable emissions. Our exposure to renewable electricity is now $2.2 billion, more than 5 times our exposure to direct coal-powered electricity generation. We have also explored ways with CSIRO to identify manners in which we can help our customers leverage the future energy shift. We're trying our level best to make our contribution to the 2-degree temperature reduction identified by the Paris Summit last year. The Global Carbon Disclosure Project this year rated CBA an A- for our work in carbon disclosure, and we're committed to improving this further. And in 4 years' time, we're aiming to be the leading bank in the Dow Jones Sustainability Index, and I can assure you it's an ambitious target. Now, in terms of diversity, we've been embracing the need for greater diversity within the group leadership team in the widest sense. In 2009, we set an informal target of 35% of women in the team from a starting point of 26%. We achieved the target by mid-2013, and we've now upped the bar to 40% by 2020. And by the end of this year, 50% of Ian's executive committee will be female. And we're similarly committed to other forms of diversity, with a particular focus on ethnic diversity. The purpose of all this endeavour is to reflect more accurately the population mix and customer base, and to make all of the population available, willing, and happy to work within the Commonwealth Bank, so that we can have the very best people to work for us. Now let me turn to remuneration, and particularly that of the Chief Executive. Now clearly there'll be a chance to ask further questions later, but let me just cover a couple of points. At the time Ian was appointed CEO 5 years ago, his remuneration was pitched at a level below that of his peers and below that of his predecessor. He was at the time awarded some long-term performance rights, 3/4 of which would vest if the bank performed in financial terms in the top quarter of a group of Australian companies, and the balance, 25%, if we performed at the top of our banking peers in customer satisfaction. And between 50% and 75%, they would vest pro rata. And if these objectives were achieved in full, the shareholders agreed that the CEO's rights would vest in full. And they approved the plan. And our performance was very strong on both fronts. Over the 4-year period, we were in the 70th percentile in financial performance, i.e. the top 30%, and we were top in customer satisfaction. The share price went from $44 to over $70, and we went from number 3 to number 1 in customer satisfaction. This was the result the shareholders wanted. This is what happened, and our Chief Executive was rewarded accordingly. This year, however, shareholders have expressed concern about the remuneration report, which of course is item 3 on our agenda. And related to that, the award of reward rights to the CEO under item 4 on the agenda. And these concerns relate to the proposed long-term reward plan and the lack of clear targets and metrics. They also relate to the lack of clarity of the short-term incentive plan and the targets that we have, and how the board exercises its discretion, or our discretion, in relation to these awards. And we absolutely acknowledge these concerns, and we're not going to be issuing long-term performance rights under this new scheme to the CEO. So item 4, we've withdrawn from the agenda. But instead of that, we're going to issue rights on the same basis as the scheme approved by shareholders in 2015, which will be funded by shares to be bought on the market. And that award is going to be capped at 55,443 reward rights, shown in Resolution 4 of the agenda for this meeting. And you'll recall that the 2015 plan was based on 75% total shareholder return and 25% on customer satisfaction. We're going to be engaging with, talking to shareholders over the next 12 months on all of these issues. And the board is also going to be considering moving the basis of the calculation of the number of reward rights from fair value to face value. And we're looking forward to these discussions, but as always, your board will have our eyes focused firmly on the future. Now, we constantly consider people and talent, innovation, creativity, the customer, and we're always watchful for the disruptors and for unexpected risk. As a result of this, the bank has produced premium returns to shareholders, and your board is determined that we will continue to do so. The shape of this bank in 5 to 10 years' time is going to be very different. And we believe that to produce a continued and excellent performance, we're going to need 3 key ingredients, or to include 3 key ingredients. The first is an environment, which I mentioned earlier, in which the very best talent, irrespective of gender, ethnicity, will be attracted to the bank and will be stimulated by working within the bank. Second, an organisation that more than satisfies its social obligations, including sustainable excellence and practices. And third, a business that performs in an ethically responsible manner, transparent, accountable, honest, and trusting. All of these objectives require powerful messaging right down through the organisation, And as we demonstrated with customer satisfaction, there is no better way to do this in terms of a communication tool than through the reward system. It is really very powerful. And we are acutely aware that sustainable success for the bank has got many, many different ingredients. People working in this bank must be proud and they must be excited to be here. Now, just turning to the board, as chairman, it is my responsibility to ensure that your board has the right mix of experience and skills. A well-functioning board needs to have directors with diverse backgrounds and a wide range of perspectives. This year, I'm delighted that we've been joined by Kathryn Livingston and Mary Padbury. Kathryn has extensive leadership experience, including at some of Australia's most innovation-focused organisations. This, together with a background in finance, means that Kathryn is already making a significant contribution to board discussions, and I'm going to come back to Kathryn in just a minute. Similarly, Mary Padbury, an experienced intellectual property lawyer, brings exemplary legal technology and governance skills that will greatly enhance the board's knowledge base. Now, both Kathryn and Mary will share more of their backgrounds with you in a few moments. But earlier this year, Jane Hemstridge retired after 9 years as a director. Jane chaired the Remuneration Committee for 6 years, and she made a tremendous contribution to the board through her insight, her judgment, and her unique sense of humour. Sir John Anderson is also stepping down this year, having served for 9 years. John has been an excellent director, a tremendous supporter of the bank who contributed enormously to the board. And on behalf of my fellow directors, the group executives and our shareholders, I'd like to thank both Jane and John for all their very hard work and their dedication to our group. And we're going to miss them both. We've also made some important changes to board committees. Harrison Young has passed the reins of chairing the Risk Committee to Sheree. And with Jane's retirement, David Higgins now chairs the Remuneration Committee. As was announced in the notice of meeting, Sheree, Sir David Higgins, Brian Long will be standing for re-election, and each of Kathryn and Mary will be standing for election. Now, as I said earlier, I decided to retire from the board at the end of this year, and I'm delighted that the board has appointed Kathryn Livingston as my successor as chair. Congratulations, Kathryn. I know you're going to do an absolutely terrific job. In my opening remarks, I spoke of the need to be strong and resilient, to continue to invest in technology and innovation, to be more productive, and to build a workforce that mirrors our community, that aligns with our long-term strategy focused on the customer, our key capabilities of people, productivity, strength, and technology. We also believe that the Australian economy remains well positioned. The transition that is underway from a tremendous dependence on mining to a broader-based economy is providing the foundations we need for future prosperity and success. We know there are still challenges to be overcome, such as low levels of business investment and the prospect of lower for longer interest rates and inflation. But against this backdrop, there is also a plethora of political and economic uncertainty outside of Australia. But despite this, we remain committed to our long-term strategy and to supporting the economic activities that are critical to our economic future and our common future. In remaining steadfast to our vision of financial well-being, we're going to remain a strong and successful bank for our customers, our shareholders, our people, and our communities. And in closing, I'd like to reflect again on the advances and changes that have happened over the last nearly 7 years. The progress made for customer-led technology, service, and attention has been second to none. Our focus on vision and values is incredibly important to sustain the success of the bank in the future. And I'm enormously proud of the hard work and the effort that has seen the Commonwealth Bank transform into an innovative leader and a diverse and inclusive workplace It's a bank for Australia's future. I'd like again to thank all of our people for all their hard work and for the dedication to our customers and values. It's their commitment that underpins the group's continuing strong performance. And I'm also grateful to my fellow directors and the senior management team who work so well together and with such dedication to secure the future of your company. Finally, thank you, our shareholders, and our customers for all of your continuing support. Now, I'd like just to pass over to Ian to say a few words to you, and then we'll continue with the meeting. Thank you.
Thank you, Chairman, and good morning, everyone. I too would like to acknowledge the Noongar people of the Withdrew Nation, the traditional custodians of the land we're meeting on today, pay my respects to their elders past and present, and to all other Indigenous Australians here today, and to welcome you all and to thank you very much for joining us. Our executive team visits Perth fairly regularly, but given the usual rotation of the Commonwealth Bank's annual general meeting around the country, the last time we held our annual general meeting here was in 2009, 7 years ago. And when we reflect back on what the world looked like in 2009, boy, it was a different sort of a place. When we last met here, on the one hand, we were in the midst of a global financial crisis, and on the other hand, we were in the midst of a mining boom. At that stage, in terms of the Commonwealth Bank, we were third of the four major banks in customer satisfaction, with customer satisfaction at about 74%. Our shares were trading at $51. We had only 2 women on our executive team, and we had only 2 women on our board. A lot has changed in those 7 years. And the Commonwealth Bank, as the Chairman mentioned, has had to adapt. But one thing that has remained very consistent over the 7 years is our strategy. So for those of you who were at this meeting in 2009, and welcome back, you would have heard my predecessor talk about the importance of customer satisfaction. You would have heard, as I recall in his remarks, him talking about becoming more efficient, about the need to invest in technology. He talked a lot in 2009 about the importance of the bank being strong through the global financial crisis. And he said that all of this is underpinned by people, great people. Now, 7 years on, if you look at any of our strategy discussions, communications internally or externally, you will see very, very similar themes. We talk about customer focus being the core of what the Commonwealth Bank does. We talk about the importance of building strategic advantage in the strength of the bank, in technology and in productivity. And again, we emphasise the fact that all of this depends on the quality of the Commonwealth Bank's people. That consistency has really been of a lot of benefit to all our stakeholders. So 7 years on, our customer satisfaction has moved up 10 percentage points, from 74% to 84%. We've moved from being the third of the major banks in customer satisfaction to the first of the major banks in customer satisfaction, overall, and under the Net Promoter Score methodology. For those of you who held shares in 2009, the return on those shares in the ensuing years has been 104.5%, or a total of 10.8% per year, including the growth and the dividends. The next best major bank, the return is 77%, or 8.5% per year. So your $51 share has gone up by 40%, and at the same time you've received $25 of dividends during the period on that $51 share. As a result of this strategy, we've grown to become the most valuable listed company in Australia, Australia's largest taxpayer. We now have half of the senior executive team who are women and 4 women on the board. All this has happened over the last 7 years under the chairmanship of David Turner. And as a fellow board member, as an executive, and as a fellow shareholder, I would like to acknowledge David's extraordinary contribution and thank him for his principled and inclusive leadership. In all those capacities, I would like to also convey our excitement at the appointment of Kathryn as David's successor. But as the chairman mentioned in his address, businesses can't look backwards. Learning from past experience is a very important part of management and governance. But relying on past success is fatal. So when we have the next annual general meeting in Perth, the board, the management team, the shareholders of the time will no doubt be talking about how, among other things, the Commonwealth Bank has reacted to a world of unprecedented low interest rates and global deflation. About how the Commonwealth Bank has adapted to a world of significantly increasing competition as a result of ongoing technology innovation and innovation in banking business models. And they'll be talking about how the Commonwealth Bank has adapted to higher levels of scrutiny, higher levels of community expectations regarding large companies generally and banks specifically. So what are we doing now, and what do we intend to do in the future to meet those global challenges? Well, the first thing I can say to those of you who have read and heard about the ongoing pressures on bank profitability, that your management team is alive to these pressures and is determined to ensure that we cut our cloth to suit the times. That said, we are a 105-year-old company, and we will resist any temptation to boost short-term performance by decisions that could harm our long-term competitiveness and our long-term ability to achieve our vision. So we will invest in ensuring that we have the capital strength, the liquidity strength, and the strength of lending standards to ensure that we maintain the confidence of funders while at the same time being able to perform our vital role of extending credit. We will continue to invest significant money in technology because our goal has to be to make sure that both the customer experience with the Commonwealth Bank and the efficiency of the Commonwealth Bank is at least as good as the best of the new technology competitors. And we will invest to ensure that we meet and indeed exceed the increasing expectations of the community. Now, on this last point, let me say personally, and on behalf of the Commonwealth Bank, that we have not always done as well as we should have. But we have learnt from these experiences. And we are now taking committed, long-term, fundamental action. First of all, together with Australia's other major banks, we are actively participating in a broad program of reform under the umbrella of the Australian Bankers Association, which is looking at, among other things, the impact of remuneration practices on our people's behaviour, the ease of use of customer complaints procedures, and of whistleblowing policies. These programs are all being independently governed. We are executing them with very significant intent, and we will continue to do so. But that is actually just the table stakes. Beyond that, as the chairman has mentioned, we are committed to a fundamental program, our Vision and Values program, of ensuring that our products, our policies, our processes are all guided by very strong values. as we continue to exercise that program, to execute the program, which is led by me, which is the single initiative on which my team spends most of its time, and which the board received its latest update on only yesterday, as we execute that, we will minimise mistakes, we will harness the passion of our people, and we will also, as the chairman mentioned, as we inevitably make mistakes as a business of this size, address them speedily and with fairness. When we're an organisation of this size, and we are going back in many cases a decade or even more to ensure that we address past mistakes and bring the business to contemporary standards, this will take time. But we are executing this with daily intensity. We have a long-term commitment to it, and it is already making a very significant difference to your bank. Ultimately, when we next meet here, the extent to which we have or have not succeeded will be dictated above all else by the passion of our people, the capability of our people, and the culture which we collectively create. You know, a lot of people use the term big bank. Well, let me tell you what this big bank is. This big bank is 40,000 Australians and another 10,000 people overseas. They are this big bank. And if you spend a lot of time, as I do, in branches, in business banking centres, in call centres, in all parts of the group, you will see why we are proud to represent the people of this big bank, and we are so confident in the culture that they create. Yes, occasionally they make mistakes, and even more occasionally, some among their numbers deliberately go out to do the wrong thing. We will deal with that and are dealing with that. But overwhelmingly, the 50,000 people that comprise your bank come here excited to make a positive difference for our customers. When, as a result of their hard work, we generate good profits, that should be celebrated. And the reason it should be celebrated is that the ultimate beneficiaries of those profits are you. Once we've made our revenue and paid the salaries of our 50,000 people and paid the more than 5,000 small businesses that comprise our partners and invested tens of millions of dollars in the community and been Australia's largest taxpayer, after we do that each year, the balance, 70+% of the balance, goes to you. And in the last 7 years since we've been here, $41 billion of dividends have been paid back to our shareholders. 80% of our shareholders are Australian families, either directly or through their pension funds. As David said, they are not Australia's elite. You are Australians from all walks of life. And that's why we are proud to work for you, and we're proud of the outcomes which the hard work of our people deliver for you, our shareholders. We thank you for your support. We thank you for the interest that you have shown in the Commonwealth Bank by attending today. We listen and welcome your views today and beyond, whatever they are, and we can assure you that doing our best for you is a very strong motivation. Thank you.
Thank you, Ian. I'd now like to turn to the formal business of the meeting. Shareholders and those persons holding proxies will have an opportunity to ask general questions at the time we consider item 1 on the agenda, and specifically on each resolution when it's put to the meeting. I then ask questions the questions be confined to the business of the meeting and shareholder issues. Customer matters really aren't items for discussion at this meeting, but there is a customer service booth in the area outside the entrance to this meeting room, and officers of the bank are available to assist you with any concerns you may have, so please do take this opportunity after the meeting if you wish. Mr. Marcus Laithwaite of our auditors, PricewaterhouseCoopers, is in attendance today to respond to any questions relevant to the audit report and the independence of the auditor. Any questions for the auditor should initially be directed to me as chairman, and I will determine whether the question is appropriate for the auditor or whether the Chief Executive Officer, the Audit Committee Chairman, or I should properly address the issue. Several questions have been submitted to PricewaterhouseCoopers on the conduct of the audit and the Group's 2016 financial report, specifically relating to the auditor's consideration of climate change risks. There is a written response from PwC to these questions. The responses are available to shareholders from the share registry desk in the foyer outside, and after today will be available from the Company Secretary on request. We'll now move to the first item on the agenda, which is to discuss the financial report, the Director's report, and the Auditor's report for the year ended 30th of June 2016. I'd like to ask Brian Long, who's Chairman of the Audit Committee, and Sheree Shapt, who's Chairman of the Risk Committee, to join us on stage to respond to any issues in relation to those functions. Those committees, I should say. There is no resolution for this item. I'd now like to invite shareholders or proxy holders if they would like to ask any questions or make any comments concerning the 2015-16 financial statements and the reports of the bank's operations in general. I'd ask shareholders wishing to speak to please proceed to the closest aisle microphone, and I'll invite you to address the meeting in turn. I'll identify the next speaker by the number on the microphone at which you're standing. Please show the attendant your red card or yellow card, and I also ask that you identify yourself to the attendant at the microphone who will introduce you. And if you're a proxy holder, please identify the shareholder you're representing. I'm afraid that blue visitors cards or green media cards are very, very welcome to be here at the meeting, but they can't participate in it. In order to give shareholders and proxy holders an equal opportunity to speak, if you could ask only one or two questions at a time, going to the end of the queue at your microphone if you'd like to ask another question. Now, are there any general questions? Microphone 3, please.
Good morning, Mr. Chairman. I would like to introduce Margaret Bulbeck, who is a shareholder.
Good morning, Margaret Bulbeck.
Thank you for that. I'm a long-time supporter of Oxfam and a shareholder in the Commonwealth Bank. I was once proud to be associated with the Commonwealth Bank, and it distresses me that the bank finances life-destroying activities. I was actually pleased to hear your report about moving to renewable energy. But today my question is about a report from Oxfam in February 2016, which revealed new information about Commonwealth Bank financing or investing in companies linked to agriculture and timber land grabs overseas and land-related human rights abuses. The report also highlighted that the Commonwealth Bank had failed to report much of these land-related risks to shareholders. A particular example is the company Bunge in Brazil, which is actually going to be sold because of the losses associated with these risky as well as immoral activities. National Australia Bank, Westpac and ANZ have all acknowledged the risks of improper land acquisitions, particularly in the agriculture and timber industries, for their business and for communities. All three banks have established land-specific policies to start addressing the issue. Given our competitors' recognition of the need to develop land-specific policies to address the risks of land grabs, could you A, outline the Commonwealth Bank's plans to develop a land policy to address these issues, and B, the timeframe in which this will happen? If we do not have plans to develop a land policy to address these issues, could you please explain why not? Thank you.
Good. Thank you very much for the question. Oxfam brought up this issue, I think last year, and we are very grateful for all that you do in this area, because it also helps us in a rather perverse way. And we do use our influence wherever we can, either through investment or through through the lending of money to try to influence the organisations concerned. And the one in Brazil in particular, we took steps on after you brought it to our attention. We are signatories to the Equator Principles. We do have an active environmental policy within the group. We do disclose what we do in relation to carbon emissions, and we do take all issues in relation to land grabbing extremely seriously. And I can promise you one thing: we don't deliberately invest in companies that land grab. It's not our policy, it's not our interest, it's not what the Commonwealth Bank's about. Insofar as our policy is concerned, we don't have a specific policy in relation to this. We have so many policies covering so many aspects of business, but I can assure you that we take the issue extremely seriously, and we do value everything that you do, and please keep bringing them to our attention because it's extremely helpful. We take it all very, very seriously. Thank you. Microphone 1, please.
Good morning, Mr. Chairman. I would like to introduce Ms. Simone Van Hattem, who is a shareholder.
Ms. Simone Van Hattem, good morning.
Good morning. Thank you. It was recently reported that Commonwealth Bank denied a loan to a couple in Chinchilla, Queensland, which is west of Brisbane, on the basis that their property was an unacceptable security for residential lending purposes. So this was reported in the news. According to the email from the bank to the couple, this was due to the 4 unconventional gas wells for coal seam gas that are on their property. So my question is, I would like to know whether our company determines any property with coal seam gas wells or other unconventional gas wells, like shale and tight gas that we have in WA, on it as devalued or having a higher risk profile as security as a result of those wells.
It's, I mean, I don't know the particular case you're talking about, I'm afraid, but I can tell you that we look at every single loan we make on a case-by-case basis, and we do apply environmental principles to it. We don't have a blanket policy in relation to the issue that you mentioned. But we, on a case-by-case basis, we look at everything, and we have criteria relating to every single loan we make from the group which cover these environmental issues. The specific case you're talking about, I can't comment on. I don't know if you can, Ian. Probably
No, I'm
not.
not aware of the specific case, and I think your answer is the correct one.
But do bring that. I mean, if that's a specific concern, please do bring it up to the customer service booth afterwards.
Yeah, so I'm wondering if the bank has done any analysis of the risk of land devaluation and lost business as a result of unconventional gas wells on properties and producing land, because it definitely seems like an issue. It was stated in this email that I have that it was specifically relating to those gas wells.
Well, it would only apply on a case-by-case basis, as I mentioned a minute ago. We are specific in that, yeah.
So Commonwealth Bank actually has an exposure to the pipeline infrastructure that transports gas from this couple's property. So I'm wondering, how does the bank assess the long-term risks of damage, land devaluation and potential lost business to properties affected by coal seam gas and other unconventional gas when considering a loan to companies and projects that facilitate these same operations? That seems like a hard thing to assess or analyse. I'm wondering how you would do that.
Well, it's interesting. We do it in the same way. We will look at the loan application in respect of whatever investment it might be or whatever activity it might be, and absolutely treat it on its merits, and that would include long-term serviceability of the particular asset in question. That would form part of the way in which we assess these particular activities or these particular exposures for the group. And again, I would simply say again, it is very much on a case-by-case basis, because as you rightly say, the deliverer of a commodity is different from the person that produces the commodity, or indeed the house that sits on the place from which it's being produced. Every single one is a separate issue.
So you were talking before about, putting things right for customers and apologising to customers that have been affected by the ComInsure issues. I'm guessing by the fact that you both or all haven't heard about this, even though it was reported in the media, that an apology hasn't been issued to the couple, because if Commonwealth Bank supports the gas activities that have clearly impacted the value of their property, I would think that they would warrant an apology from the bank as well.
I have to say, not being aware of the case, I'm not sure what letter or what communication there was with the customer, but I can simply repeat that we look at these things on a case-by-case basis, and if it didn't work for that particular case, then I'm very sorry it didn't.
Thank you for your time.
That's okay, it's a pleasure. Microphone 2, please.
Good morning, Mr. Chairman. I would like to introduce Mr. Jeff Derrick from the FSU, who is a shareholder.
Mr. Derrick, good morning.
Good morning, Chairman. Mr. Chairman, on the 13th of May 2016, you were reported by the Australian Financial Review as holding the following views. And I quote, Turner accepts that there can be conflicts between customer and employee interests. There could be conflict. You can structure remuneration in a number of ways so that it doesn't conflict. You can have countervailing measures that will put it right. We are looking at how remuneration is structured. It's too early in the day to tell you what we are going to do because I don't know, but it's part of how you incentivise people. And Turner argues the board has a significant role to play in building culture, especially among senior employees. Mr. Chairman, given this report and in light of the Australian Bankers Association's CEDRIC review into frontline retail bank staff and incentives, how has the board ensured that the executive remuneration and structure, together with outcomes, will drive a better culture from the top down and deliver on rebuilding trust and confidence in the bank and our financial system?
Well, thank you. Thank you. It's a very good question and touches on some of the points that I made when I was talking earlier. We are very aware, this year in particular, that we do need to talk to our shareholders about how we are remunerating our top people, the structure of the remuneration, how variable it might be, how success dependent it is, and a whole raft of other issues. And we're going to be talking to the shareholders over the next 9 to 12 months before we come back at the next annual general meeting. And that will be absolutely active. We're listening to what people say, and that's for the executives at the very top level. Insofar as the Bankers Association is concerned, we are tracking what they're doing with very great interest and look forward to the outcome of their deliberations. Thank you. Microphone 1, please.
Mr. Chairman, I would like to introduce Miss Karen Davis, who is a shareholder.
Ms. Karen Davis, good morning.
Good morning. I note that our position on human rights is guided by the United Nations Guiding Principles on Business and Human Rights. But I'm also aware that as an Equator Principles Bank, we are also required to conform to the International Finance Corporation performance standards, which require that free, prior and informed consent is obtained from Indigenous peoples. Given this, can I be confident that our bank will avoid exposure to projects where the free, prior and informed consent of Indigenous peoples is not obtained?
That's a really good. Yes, that's a good question. I mean, my initial reaction would be yes, but I don't want to fall into some frightful trap. So, would you like to amplify?
It is a very good question. I just want to tie this to what a couple of things I said at the start. Number one is our acknowledgement, and not just when we start speeches, but in the way we conduct business, of the critical importance of the Indigenous communities that we work with. And secondly, of the fact that they are very important stakeholders in a number of different decisions that we make. What I can assure you of, and this happened for me as recently as last week, we are constantly in communication with Indigenous leaders, both nationally and in all communities in which we operate, about the impact of our activities on their communities, and equally importantly, the way in which the activities of the Commonwealth Bank can reinforce the goals of the Indigenous leadership. That's in two fronts. Number one, our direct community support of Indigenous groups, and number two, equally importantly, is your outline of the impact of our day-to-day business. So while we don't necessarily translate these all into policies, because honestly in a bank in 2016 our poor people are drowning in policies, what we are making sure is that in the decision making we are making, we've got good consultation and good recognition of the critical role of Indigenous communities.
Yeah, thank you. Yeah, because I was just thinking about I would assume that given the ongoing legal challenges to the Adani Carmichael coal project in Queensland run by the Wangan and Jangalong Family Council, that would render the project ineligible for financial support. Is that correct? If you were to follow that procedure.
Look, you'll appreciate it's not appropriate for me to comment on individual projects in an annual general meeting, but what I can say is these sorts of considerations are taken into account in all our business decisions where the activities may impact the local Indigenous communities.
Okay, thank you.
Thank you.
Thank you. We have microphone 3, please.
Mr. Chairman, I would like to introduce John Campbell from the Australian Shareholders Association, and he's also a shareholder.
Good. Good morning, Mr. Campbell.
Good morning, Chairman. The ASA has proxies from 2,400 shareholders holding about 6.4 million shares. I've got a couple of questions actually on the accounts. First of all, I think I should congratulate the board and management on the result for the year. It was a good result. But shareholders on a year-end to year-end basis went backwards. The share price came down from June 15 to June 16. There are a lot of reasons for that, of course, and most of those, well, a lot of those would be out of the control of the board, but one that is within the control of the board is bad and doubtful debts. The increase in the provision for bad and doubtful debts was 128 million, I think, which is 27%, and provisions for doubtful accounts increased by about $100 million over the year. One of the measures that used to be used to gauge credit quality was the amount of non-accrual loans, where the bank has suspended interest on loans for various reasons, such as delinquency in meeting repayment requirements. That information isn't disclosed in the accounts, and I'm wondering whether it's the same as the categories that you do disclose, which are troubled loans and impaired loans. And secondly, the credit quality information would, in my view, be improved, and perhaps some of the rumours and concerns about the housing market and its effect on bank lending would be minimised if there was more disclosure of the categories of loans in the housing area, owner-occupier versus investor loans, apartments versus house and land. That sort of disclosure, which would provide more information for analysts and the market in general. Perhaps I could have your comments on that.
Well, thank you for the question. One of the reasons David Craig is up here, sitting with us, is to answer exactly that sort of question. So I wonder if I might somewhat unfairly pass it to you, David.
Yes, certainly. So we obviously disclose provisioning and so on in accordance with accounting standards. As you say, in the old days there used to be suspended interest. Now those are included in provisions as we go through, and they're all obviously disclosed. Troublesome impaired loans are a very good indication, though, of the sort of things that you're talking about, so it gives a leading indicator. Obviously, troublesome loans in particular are troublesome but not necessarily going to lose us any money. Impaired loans are when our customers are actually stopped paying us the interest or principal that they're due. So that's sort of the definition of those things. As far as, loan impairment expense was up, as you say, about 128 million. We feel that at this stage that's actually still a fairly benign result. We feel that we're bumping along the bottom of the credit cycle at the moment, so and that loan impairment expense was very consistent with what the other major banks had in this period. It's a sign of the times. Clearly, loan impairment expense is a cost of doing business. If we took no risk, then we would lend no money. So it is inevitable as part of lending that occasionally, unfortunately, customers are not able to pay us back for them because of their circumstances, and so that's the measurement of that cost. As far as disclosure of types of lending, we actually have a lot of disclosure in our investor pack, which is available on our website and does provide all of the information about the relative types of lending we're doing, particularly split between investor and owner-occupied housing. Not only the balance of that and the total balance on our accounts, but also the most recent flow of more recent loans in those different categories. And so that's all available. And there are also lots of graphics there about the different types of security, the states that we're lending in, and so on.
Thank you. Can I have a follow-up question on the cash flow statement? The cash flow statement discloses that for 2 years running you've had a deficit of cash flow. This year's deficit of about $5 billion is roughly equivalent to the amount of the dividend payout. If you saw one of your borrowers using borrowed money to pay their dividends. You'd be concerned about that, and I would imagine that I realise that the cash balance on the balance sheet is a small item, and that it's more to do with the day-to-day management of bank liquidity than it is to do with the sort of cash flow that one sees in an industrial company. But nevertheless, it's not a good look from an investor point of view, and I was wondering if you'd like to comment.
You'll notice that there's actually a note at the bottom of the cash flow statement saying this is not used by management to manage the day-to-day operations of the bank, and you'll find all other banks would have a similar statement at the bottom. Because, as you say, the one thing we do have is cash. And so we manage our business, we have to manage our business in a somewhat different way. What we have to do is ensure that we meet all of the regulatory liquidity and funding standards to make sure that we always have adequate cash in adequate form to pay all of our debts as and when they fall due, and obviously manage the bank in a careful and stable way. And so that's the way we think about cash. You will see, as you say, I mean, the number sounds large, but relative to the size of our balance sheet, actually it's very small. But it's certainly an interesting observation.
Thank you.
Good. Thank you, Mr. Campbell. Microphone 2, please.
Thank you, Mr. Chairman. I would like to introduce Mr. Paul Fanning, who is a sophisticated shareholder from Melbourne.
Good morning, Mr. Fanning.
Thank you, David. And I commend you on your chairmanship of CBA over the years, and I wish you the best in future years, and you'll probably look back and say, weren't they good years? And maybe 2 more in the future will be beyond you.
Thank you.
So, thank you. I have 4 questions, David, and these will probably almost go to David Craig, I think, but that's for your call. The first 2 questions relate to your quarterly update statement yesterday, which unfortunately didn't seem to get addressed in either of the 2 speeches today. But consumer LHE or loan impairment expense seems to have risen in the quarter, and there seem to be stress areas here in WA and Queensland and impacted by the mining downturn. So that would imply there are some impairments which we could know about, not in dollar terms, but in a more broader way. Individual provisions were up from 944 million to 970 million in the quarter. Now, the next 2 questions relate to the annual report. The reference on page 11 of the annual report, the Wealth Management Division again, particularly in the second half 15-16, has not been a very, very healthy division, like minus 34% between the 2 halves. Are these issues really related to endemic or chronic matters concerning CommInsure or advice issues, or is a lack of writing of new business, be it in wealth management or in CommInsure? Sorry, being a bit cutting or biting. And the other question relates to the IBM, Institutional Banking and Markets. The result was rather weak in both halves. Why could this be? Give me about 5 quite specific questions, so hopefully
well, we'll try
there will be some answers. Please.
Good, excellent. Well, thank you for that. You've addressed 2 completely different releases in the bank, the quarterly update and, of course, the annual report. Yes. I think it's a combination of Ian and David in respect of this. So,
yes, should I handle the first 2 and then Ian can handle the second 2?
I think that sounds good. Perfect.
Yeah, delegation. So on loan impairment expense, we reported, as you say, a loan impairment expense that was up a little bit on this time last year, but actually down on the full year result for last year. So last year, loan impairment expense was 20 basis points. This quarter, it's 17 basis points, so actually a little bit lower than the average of last year, but certainly up a fraction on the first quarter of last year, which is what those comparatives are about. As far as West Australia is concerned, we did call out in the media release, as we did in the final result last year, and as I note Westpac did on Monday, that there have been elevated arrears in West Australian and Queensland mining towns. We took some provisions for that last year, and we have now taken some further provisions in this first quarter. They're conservative provisions. We've looked very hard at what's happening with individual customers. The issue that's happening, of course, in mining towns is that as activities are dropping in mining towns, some houses are now unoccupied, and so their value has dropped, and that may mean that in due course customers are unable to pay their mortgages. So we've anticipated that and taken some provisions in case that happens to be the case. You're right, in saying provisions are up a little bit. That's sort of a function really of the size of the balance sheet. So as the bank grows, the aggregate amount of the provision balances tends to grow with them. Again, in aggregate, provisions are pretty consistent to the total amount of assets that we have on our balance sheet, period on period. I'll hand over to Ian to talk about wealth.
Yeah, in terms of the wealth management business, Mr. Fanning, and let me say you follow us wherever we are in the country on the AGM, yes, so thank you very much for being here.
Not last year.
Yes, we did miss you last year. In terms of the wealth management business, look, there are a lot of different factors going on. So first of all, let me be very clear about the impact of remediation programs, etc., of the things we've been doing for the last decade, particularly in advice on the business, which is over the last few years, yes, as you will know, these things have been taken into account in the wealth management P&L. Yes. Our approach with the wealth management is the same as we think about provisioning and credit quality, which is the bank's own affirmative view is we tend to take a provision or an accrual as soon as we see the issue. So what that means is that the vast majority of anything relating to the past advice claims, including, as you will have noticed, the vast majority of the provisioning relating to the fee refunds has been taken into account a couple of years ago. There's very minimal impact in this year's P&L. Okay. And likewise, what we said in August was the specific impact on the P&L in relation to the CommInsure matters that the chairman referred to was minimal in the year. Now, obviously, as we bring in all the independent people that the chairman talked about, because it's important to us to provide insurance, that costs money. That's in P&L, but it's not a material amount. What you do see in the wealth management businesses is a number of different moving factors. Number one, you've got a lot of markets impact in those businesses, and markets go up and down. Number two, because of the asset management business, you've got significant foreign currency impacts in that business, and foreign currency goes up and down. And number three, in this particular year, what you had is that we found that the claims experience, and this is true across the industry, and you'll have seen it in other insurers' results as well, this year, the actual experience, particularly on total and permanent disability claims, had been worse than had been factored into the pricing over previous years, and that resulted in a specific number being taken, what we call loss recognition accruals, and that was actually quite a significant number in the year and was disclosed. So inevitably in these businesses there are all sorts of moving parts, but the historic factors were not a major driver in the wealth management results of this period.
Thank you. And the final one, but they'll have another supplementary question after that, if I'm allowed, was in the institutional bank. The result was weaker in both halves. I seem to remember having asked about this 2 years ago too, if my memory serves me correct. So is there ultra competition there that's, or is it the foreign currency hedging, or is it, what is it?
Yeah, as is previously, there are a few different factors at play here. First of all, in the institutional banking and markets business, I think the most critical thing to bear in mind is that unlike some of the other businesses that we are in this country, there is a very different industry structure. This is an industry in which Chinese banks are very active in Australia, Japanese banks are very active in Australia, international banks are very active in Australia, capital markets are very active in Australia, and therefore inevitably there's a very high degree of competitive intensity. That does impact on pricing. Now, Kelly Bayer-Roseman and her team are very committed to ensuring pricing discipline in that market, but it's a business we're serious about, and you do have to price to the market. Second, overall balance growth was a bit lower, particularly in the second half. and that really reflects the fact that we are willing to pull back a little bit when the margin environment isn't so good. Thirdly, we have continued to invest a little bit in that business because, as I said before, we do invest for the long term, and it's important for us that the people capability and the systems capability has been good. So it's a business that we feel very good about in the long run, but the current cyclical profitability of it is a bit lower, and you've seen that show up in the results.
And I'll just wrap off on just a final comment. So just as well, there was a good return on retail banking and business and private banking, if not the NPAT being flat or in the cash profit too, there probably would have been slightly negative.
Yeah, again, those businesses are very much a function of the economies that they're in. I mean, I think if you look again, and we look very closely at the competitor results which have just been released and compare them to our own, as a board and a management team, we feel pretty good about the relative performance of both the retail bank and the business bank. What I will say is that both those businesses, again, are functions of the economy that they are in, the competitive forces and also the general macroeconomic forces. So they're doing very well. But as I alluded to in my opening remarks, and probably underpinned your comments to the chairman, bank profitability is not at the moment quite what it was a few years ago, and we've just got to make sure that we reflect that.
Okay, thank you. They are my questions for the day.
Good. Thank you. Can we have microphone 1, please?
Mr. Chairman, I would like to introduce Mr. Glenn Diggins, who is a shareholder.
Good morning, Mr. Diggins.
Good morning, Chairman, and thank you for taking my question. Look, listening to some of your remarks and even replies to a question earlier on, it surprises me that with the bank being customer focused and shareholder focused, why you haven't at least asked shareholders for their views about the management of carbon dioxide. And I would have thought that that would be a very good place to start, because carbon dioxide is a very important gas in the atmosphere. I just asked the lady behind me what percentage of the atmosphere she thought it was, and she really didn't know, and eventually said maybe 10-15%. In actual fact, this very beneficial and important gas makes up approximately 1/25 of 1% of the atmosphere. And for the bank to be putting its marbles in renewable energy, when we've just seen the problems that have been created in South Australia, and you can see them growing in Victoria and soon to be in Queensland, I think it'd be a good thing for the bank, and I'm asking the question, why haven't you thought to ask the views of many shareholders who are well qualified to be able to comment on this very important gas?
Well, thank you for the question. We, while not asking all of our shareholder base, which of course is millions of people, for specific views on this, we do consult widely with government, with organisations that represent the environment. We talk to extractive industries, we talk to industry generally, we talk to manufacturing industry. We consult very, very widely on what the bank's doing and how we are positioned. And the only thing I can say in the whole of this area is that we take a balanced view of everything we do, and we try to take the interests of every possible individual into account, but we're not capable of pleasing everybody, and we know we won't be able to do that. And we do try to stay abreast of it. We have a climate change team that spends all of their time looking at these things and looking at compositions of the atmosphere and the impact of different things on that.
Okay.
Thank you.
I've got other questions. I'll ask them later.
Oh, that's all right. That's fine. Can we have microphone 3, please?
Mr. Chairman, I'd like to introduce Grant Morris, who is a shareholder.
Mr. Morris, good morning.
Thank you. Loan impairment expense is up 23%. I was just wondering if you could give a forecast of some provisioning if Sydney house prices were to, say, fall to what they were 1 year ago or 2 years ago.
That is an interesting question. I quite like these sort of slightly different questions because I can point to the other people on the stage and they can talk. So who's going to forecast Sydney house prices?
I'll give you an answer to that, because this is obviously a very topical question. You'll appreciate For various reasons, we don't give specific forecasts to the loan impairment expense. But this topic of housing prices, and particularly their impact on the bank, is obviously very important. When we are extending loans, we take a view, obviously, primarily on the customer's ability to service the loan, and then making sure that the overall amount that is owed relative to the security provided is the right amount for the individual customer. And Matt Common and his team, when people ask us what we think of the property market, my response is always we actually break the country down into more than 2,000 markets, and we have a view on all those different markets generally, but much more importantly is the specific aspect of the individual case and the individual loan. We think that overall a drop in Sydney house prices or house prices in any area within the foreseeable bands, the bank is in an extremely strong position to be able to withstand that. The question you always ask yourself is what's leading to that and what else is going on at that period of time. And when you look at the single biggest determinant of credit quality for the Commonwealth Bank, or indeed any of the banks, it is going to be unemployment. And it would need to be very significantly above the levels that we have today to cause greater stress in terms of lending. And when we look at unemployment numbers, we always say if you're one of the unemployed people, that's a really big problem, and we should never say unemployment's low and we don't need to worry about it. And we're working with customers in hardship all the time. But overall, given the combination of the employment outlook and the property price outlook right across the country, we feel good about the quality of the credit over most foreseeable scenarios.
I might just add that the loan to value ratio for the bank's home loan portfolio as a whole is averaging 47%. In other words, the loan is only 47% of the current value. So, of course, on average, it would take a lot of a drop. And in particular, by far the majority of our home loan portfolio was lent before the last year, so it was based on property values at the time that the borrower borrowed. And so it's really only the most current loans, the most recent ones that were made, which are a small portion of the portfolio, which would see the value of their property going down a little bit.
Thank you, David. Can we have microphone 2, please?
Thank you, Mr. Chairman. I would like to introduce Mr. Brian Tennant, who is a shareholder.
Good morning, Mr. Tennant.
Thank you. Congratulations, Ian and David. You've done well. What I like about you, Ian, is that when you speak publicly, you speak the man in the streets language we can understand. You know, that's very good. And but what I'm concerned about is that there is a life insurance situation with the Commonwealth Bank which got huge publicity, and even you had to ask questions in Parliament. And what I'm concerned, I'm critical of the media overdoing the emotion at the expense of principle. That's my personal opinion. And someone who takes another person's medication, prescription medication, and contributes to their death, to expect the payout would be unprincipled. Has there been a resolution on that matter as yet? Thank you.
Do you want to take that, or do you want to answer it?
Yeah, if you'd like to.
Thank you for the question. I won't comment on the individual matter, but I do want to comment on the broader issue of life insurance. You know, you haven't heard us say this is the media's problem, etc., because I've sat opposite the customers affected, and these are really sad stories. And the number one issue that we need to face up to is if there's an individual case where somebody thought they were covered at a time where they're terminally ill or in great distress, that's a bad outcome. And whatever we do, we need to do to minimise the chance of that happening, we will do. Now, the Chairman's made very clear in his opening address that a very significant amount of work's been done. That's not quite finished yet, and we won't make any final pronouncements till it is. But to the work done to date suggests there's no systemic problem in CommonSure, and that's based on a lot of independent input that the Chairman's talked about. Notwithstanding the outcome of that, what our team is and will be focused on, and the industry needs to be focused on, is making sure that these products are good, easily explainable to people, easily understood by people, and we're all going to do the work we need to make sure that's the case.
Microphone 2 again, please.
Thank you, Mr. Chairman. I would like to introduce Ms. Kirsty Lightfoot, who is a shareholder.
Ms. Lightfoot, good morning.
Good morning. Thank Thank you. I just wanted to start with, I've been a Dolomite since I was a little kid, and I've always banked with Commonwealth, and I've been proud to bank with Commonwealth up until the last couple of years. Just as our global position is changing, I'm finding more and more that I'm looking at needing to divest due to all banks and their investments. So my question is related to the 2 degrees in Paris, and you guys mentioned that agreement, and I'm really happy to hear that, and I'm really happy to hear that you guys are talking about renewables, which is fantastic, but there's a bit more to be done as well. So going on with the Paris Climate Change Agreement, and it's just come into force, and we all recognise globally that we have a role to play in helping to achieve that goal. Does the board agree that achieving this goal means the global economy must remain within a limited carbon budget?
Yeah, we can only do what we can in the bank. You started off by saying you're a Dolomite. I mean, I hope you remain a happy Dolomite, although you're no longer a Dolomite. You know, there is a limit to what we can do. We have an objective here to be the leading bank in the Dow Jones Sustainability Index. I know it's got a whole range of different and ever-moving components, but you know, it will be a terrific advance from where we are today. We've reduced our own emissions by 44% in the bank since 2009. In the disclosed emissions of projects that we financed over the last 12 months, we've reduced those by 10%. We've enhanced all of our capability in terms of loan criteria, in terms of looking at the various components of what a loan might comprise, and I sort of addressed that issue before. Insofar as that all contributes to a finite carbon envelope for the world, then we're doing our very, very best. But the world is forever moving and forever shifting, and our life, you know, we're doing our very, very best in this area, but our life always has to be something of a balance.
No problem. Thank you.
That's okay. Thank you. Can I have microphone 3, please?
Thank you, Mr. Chairman. I would like to introduce Michael Fabiankovich, who holds a proxy for a shareholder.
Mr. Fabiankovich, good morning.
Good morning. A range of studies have emerged in the past year that point out that we cannot hold global warming to below 2 degrees while allowing the further expansion of the fossil fuel industry. Why then, given our position on climate change, has the bank continued to lend to projects that expand the scale of the global fossil fuel industry, such as the Sabine Pass LNG terminal, the Johan Sverdrup oil field, and the Heidelberg deepwater oil field?
I mean, I think I said earlier that our exposure to coal-fired electricity power is tiny now. It's tiny in relation to our exposure to renewable energy. But Ian, are you aware of these specific projects that are being discussed?
Yeah, again, we've got a very important overarching framework for how we are assessing all these lending decisions, and David has mentioned that through sustainability, environmental impact is a very important part of all our lending decisions. Now, as he has outlined in response to the previous question, there are aspects of what we do that we need to balance various different interests in terms of funding projects at any given period of time. But the trends and the numbers that were outlined in the Chairman's speech in terms of what we were actually doing make it very clear that our funding of those sorts of projects is going down and our funding of renewables is going up. What we won't say, and we understandably have this discussion at every AGM, what we won't say is that tomorrow there's going to be a switch flick that is going to create a certain outcome. What we will say is that we're very alive to the concerns, we're consulting very openly, we've got very clear policies on how we will assess it, and you can see the impact of all of that on the actual lending that we are doing.
Thank you.
We have microphone 2, please.
Thank you, Mr. Chairman. I would like to introduce Mr. Julian Vincent, who is a shareholder.
Good morning, Mr. Vincent.
Good morning. This question relates to the question submitted on the Auditor's report, which I'm happy to own up and acknowledge that they were sent through by myself. So I appreciate the consideration given to that, but not really the response. The questions, 7 of them, related to the Auditor's consideration of climate risk. In the one-page response to the 7 questions, that content, that topic, wasn't referred to at all. Nothing whatsoever. So I'm not that confident that the auditors actually have the expertise to take this into consideration, which is a big risk. I mean, you might have seen the the barrister earlier last week acknowledged that directors are going to become more and more culpable and responsible for managing these risks in time. So can we remedy this? Can the auditor commit to actually providing responses to the questions that address the content of the questions? And the auditors responded, but not given any information about whether the Paris Agreement is considered a business or material risk to the bank's operations, and especially in light of the investments in offshore oil. So can the auditor tell us here and now about its expertise on climate risk to give the shareholders some confidence about the conduct of the audit?
Good. Well, thank you. Thank you for the question. I mean, I think we can only answer for what we do within the business. And I wonder if I could just ask you, Marcus Laithwaite from PwC, to give you an answer to your question.
Sure.
Yeah.
Thank you, Mr. Vincent, for your question. Just before addressing your specific question, I would like to briefly take the opportunity to explain the role of the audit of the financial report. Management's responsible for the preparation and presentation of that financial report, and it's the Board of Directors that approve the financial report, including that it is fairly presented. Our responsibility, my responsibility, is to give an independent opinion as to whether the report is prepared in material respects in accordance with the Corporations Act and the Australian accounting standards. As the auditor, we provide reasonable assurance that the financial report taken as a whole is free from material misstatement. And during the course of the audit, we focus on procedures, on risk areas with a potential to materially impact the financial statements. These risk areas may arise from a range of factors, some of which are internal, some of which are external, including things like the economy. Major points discussed with the Audit Committee during 2016 focused on these risk areas and included areas, not exclusively, but included credit risk with regards to loans, impairment and provisioning, regulatory risks, regulatory reporting, valuation of financial instruments, and other provisions. I do note for the 2006 audit, we didn't specifically include climate change as a key business risk that had the potential to materially impact the 2016 financial statements.
That clears it up. Thank you.
Thank you, Mr. Another microphone too, please.
Thank you, Mr. Chairman. I would like to reintroduce Mr. Paul Fanning, who has another question.
Mr. Fanning, welcome back.
Thank you. Look, I think that this question, Ian, you partially answered before in regard to property markets, but I'll draw your attention in, or zone it in a little bit more specifically to the apartment markets in the Melbourne and Brisbane. You'll be aware that Deloitte Access Economics and Morgan Stanley painted rather dim pictures of property values ongoing, particularly from the end of 2016 going to 2017, which will be negative late this year, probably a plateau, and then 17 apartment market prices in the Melbourne and Brisbane will taper off. Now, this one just from the Deloitte Access Economics, was actually Morgan Stanley, and then it was actually backed up by a noted financial journalist in one of the national newspapers. Now, given that CBA have a large book for residential and investment loans in mortgages, I would like to think that the bank is aware and has some plans in action or that could be implemented. Would you like to comment, please?
Mr. Fanning, I think you take a tremendous interest in this area, I have to say, and I congratulate you for it. Ian will answer you fully, but I think you could have a really interesting discussion with Matt Comyn, who runs our retail bank, when you have coffee after the meeting, about residential prices around Australia, because he is the complete expert. But in the meantime, Ian.
Well, I was actually going to suggest you might have coffee with two people, because Adam Bennett you want to speak to as well. And Adam can put his hand up. But the quick answer to your question, which is a very important one, is the chairman outlined at the start that the economy's made a pretty successful transition to date from its dependence on mining investment. One critical way it's done that is the low interest rate environment has stimulated residential development. And if you go back to comments that the then Governor Glenn Stevens made 5 years ago, this was an explicit goal of monetary policy, and the activity has happened. And it's been activity that the economy needed to redress a real historic imbalance of supply to meet growing demand. So we, like other banks, have participated in that. Now, to come back to the point I said before about the way we think about risk, if you went down to speak to Adam's team, they could tell you apartment block by apartment block what the overall level of funding we've given, what the loan-to-value ratio is, what percentage of the loan is covered by pre-sales, what proportion of those pre-sales are from overseas clients, all the things that you would expect to be concerned about. They are following every apartment sale, every completion across the country, and they're feeding that into their lending criteria. So it is a growing area. We've gone there with our eyes open. We're happy it's grown, but we've been very cautious about it. And our understanding of the dynamics of that market are very much on the development by development basis, I can assure you of that.
Okay. I'll just wrap that a little bit more. What Morgan Stanley brought out in Deloitte Access Economics, were you surprised, or was it within the bank's general thinking that there could be a flattening or tapering off in 2017?
It's something we factor in. Look, you'll be aware there's a range of views on that at the broad global level in terms of what's happening in individual markets. Our view is very much based on bottom-up knowledge of individual developments. So we're not surprised when we see commentators like that, but we don't learn anything from those that we didn't already know, and that's generally a very good sign.
Okay, thank you. Thank you.
Thank you, Mr. Fabian. Microphone 3, please.
Thank you, Mr. Chairman. I'd like to introduce Ian Milroy, who holds a proxy for a shareholder.
Good morning, Mr. Milroy.
Good morning, thank you. The Commonwealth Bank's advisory mandate for Adani's Carmichael coal mine in Queensland ended in July 2015. However, our company hasn't ruled out supporting this project in the future. Given the impacts that this project poses to the Great Barrier Reef, the climate and traditional owners, will the Commonwealth Bank follow the lead of the other banks like HSBC, Citibank, Deutsche Bank and NAB and rule out financing Galilee Basin coal export projects due to their environmental, climate and human rights impacts?
Well, thank you for the question. It's been raised before. I mean, suffice it to say, we never rule out anything particularly, because that gets us into the whole business of specific projects and listing those we do, those we don't do. We'll absolutely treat it on its merits. We did so before. We found ourselves no longer advising it, and the issue went away. And let's just treat it on its merits. We absolutely look at all of these investments in terms of their long-term viability, their impact on the climate, their impact on the barrier reef, their impact on everything else, and we take a view. And the view we take will be in the interest of the community, in the interest of the bank, and in the interest of our shareholders.
Thank you.
Thank you. Okay. Thank you. Thank you. Well, ladies and gentlemen, I hadn't expected that, I have to say. but it was pretty well coordinated. Can we go to microphone 2, please?
Thank you, Mr. Chairman. I would like to introduce Mr. Redmond Fitzgibbon, who is a shareholder.
Mr. Skibbon, good morning.
Good morning. David, I'd just like to thank you for coming through to the West and welcome you and the board and your fellow members. Thank you.
Good. Thank you so
Cheers.
much. That's very, very kind of you, and it's good to be here. Thank you. Can we have microphone 2 again, is it? No. Are there any more questions? Microphone 3, please.
Thank you, Mr. Chairman. I would like to introduce Ernie Strawn, who is a shareholder.
Good morning, Mr. Strawn.
Thank you. Look, this negative gearing business, you people are heavily involved in financing houses, etc. And I would like to know what your thoughts are on what effect this negative gearing is having on pricing of housing, and also whether you think it's a good thing or a bad thing. Thank you.
Well, thank you very much for the question. It's absolutely on the money in terms of timing. Ian, would you like to address it?
Look, clearly, Mr. Strawn, going into the last election, this was a big issue, and there are very strong views on either side as the impact of this. What we will say is this is a feature of the Australian property market. In an environment, I mean, it's important when we're looking at negative gearing and property investment overall to see this in the context of Australia's own unique circumstances. And those unique circumstances are that people are putting away money for compulsory superannuation. With the balance and sometimes through their super funds, they're looking at various different forms of investment, and negative gearing is one of those. Honestly, this is not a topic where I think if you go through all the analysis, anybody will come out and say there's a right and a wrong answer. What you do need to weigh in is the impact of people's ability to invest, to do what they want, provide for their retirement, the impact of property prices, etc. And the negative gearing has different impacts on all those different factors. And ultimately, as we've looked into the economics of this, our belief is there is not a clear economic answer as to whether negative gearing is good or bad, which is what we can pronounce on. Ultimately, then it's a political question about which set of consequences would you prefer, and that, I think, is at the heart of the debate. So there was a lot of pressure on us at the time there was a political debate to say the bank should say what they think, and our answer is the analysis showed there's no single correct economic answer, and therefore the right way to address this question is as a political issue.
In other words, you haven't told me your thoughts, but I would value them. And if you like to tell me afterwards, I'd go along with it.
I'm always happy to give
and
my
I'm
thoughts.
aware of the fact that it's political, but I'm also aware of the fact that I believe, and this is my opinion, there's a lot of young people around who I feel sympathy towards, who would love to be able to buy a house. And because of this, it's making it pretty near impossible. And look, I won't go on, but thank you very much.
Thank you. Thank you. Thank you for those comments too. Another question from microphone 3. Do we have? No? No more microphone 2? No microphone 1? Ladies and gentlemen, if there are no further questions, I'd now like to move on to the next item on the agenda. It's appropriate to recognise the votes of both those candidates here in person today and those who voted directly or by proxy. Accordingly, following the practice established in previous years, we'll be conducting all voting on agenda item by poll, which I now open for all items. Following discussion on each item, valid proxies and direct votes received will be displayed on the screen. Those shareholders eligible to vote will be holding red cards. At the end of the discussion on each resolution, you should mark your voting card indicating how you wish to vote on the resolution. In any case, you should ensure that you have completed your red voting card before you leave the meeting so that you can place it in one of the boxes which attendants will have at the door at which you entered this meeting room. If you need to leave before the conclusion of the meeting, you may lodge your voting cards by placing them in the boxes located with representatives of Link Market Services. As the results of the poll will not be available before the close of the meeting, They'll be released on the ASX and on our own website later today. Now, agenda item 2 is the election of 5 board-endorsed directors. The resolutions are for the re-election or election of each director, and each one will be dealt with separately. All directors standing for re-election or election as part of agenda item 2 are independent, non-executive directors. I've discussed board effectiveness and performance earlier, and the board has considered the outcome of the board effectiveness review conducted earlier this year and recommends that shareholders support the election of Sheree Apt, Sir David Higgins and Brian Long, and the election of Kathryn Livingstone and Mary Padbury. As part of the ongoing board renewal process, we do seek to identify candidates for appointment as directors, and that process has been undertaken by reference to a set of criteria adopted by the board. We seek the highest quality directors to form a board capable of guiding, of challenging and monitoring management, and having input to and approving the strategic direction of your bank. The board identified Kathryn Livingstone and Mary Padbury as suitable candidates for the board. With a broad range of skills and experience in the particularly relevant areas of technology and innovation and legal, they bring a breadth of thinking and of strong governance to the operations of the board. I now ask each director standing for re-election or election to make a short statement to the meeting on their role as a director. The first resolution is for the re-election of Mr. Sheree Apt, who, in accordance with the bank's constitution, retires as a director and offers himself for re-election. Mr. Apt has been a member of the board since June 2014 and is chairman of our Risk Committee and a member of the Audit Committee. Sheree, I wonder if you could please come up and address the meeting on your candidacy.
Thank you very much, Chairman, and good morning, ladies and gentlemen. As the Chairman mentioned, I have been on the board of the Commonwealth Bank since June 2014, and I'm seeking re-election. I serve on the Audit Committee and on the Risk Committee, and with effect from October 1 of this year, I chair the Risk Committee. Prior to joining the board of CBA, I worked for over 30 years with Citigroup in various assignments, covering a range of countries in Europe, Middle East, Africa, and Asia Pacific, where I was also responsible for Citi's business in Australia and New Zealand. Over these years and over these many assignments at Citi, my assignments covered relationship management, risk management, investment and corporate banking, and general management. As the regional CEO, first in Europe and then in Asia, I reported to the CEO of Citigroup and was a member of Citigroup's executive and operating committees. As regional CEO, I gained extensive experience in managing businesses in different environments and in managing risks such as credit, market, operation, and governance risk. I was a designated senior credit officer and a senior securities officer of Citigroup. As a member of the board of directors of your bank, I see my role as working with the chairman, with fellow directors, and with the management of the bank in providing oversight with respect to, among other things, governance, controls, compliance, risk, and capital. As chair of the Risk Committee, I work with my colleagues on the Risk Committee to ensure that the bank assumes risks appropriate to its operating and business environment and in line with the risk appetite as agreed by the board. The board of your bank also reviews and discusses the bank's business and operating strategies across an ever-changing financial services environment. Technology, operational and cyber risks are just some of the big issues facing all banks today. At the same time, innovation and fintech are emerging opportunities. I strongly believe that CBA is well positioned to manage these risks and to benefit from these opportunities. As I mentioned earlier, I have extensive experience in banking across multiple geographies, and I believe that that experience provides me with the skills needed to contribute to discussions both at the board and in committee meetings. I have to say I've immensely enjoyed my 2-year tenure with the bank and the board, and with your support, I look forward to having the opportunity to continuing to serve the Commonwealth Bank. Thank you very much.
Thank you, Sheree. The matter is now open for discussion. Ladies and gentlemen, as there is no discussion, I put the resolution to the meeting. You should now mark your voting cards in relation to the re-election of Sheree Apt. For your information, displayed on the screen are details of direct votes and proxies already received in relation to Resolution 2A, the re-election of Sheree Apt. The next resolution is for the re-election of Sir David Higgins, who, according to the bank's constitution, retires and offers himself for re-election. Sir David has been a member of the board since September 2014 and is chairman of the Remuneration Committee and a member of the Risk Committee. Sir David will now address the meeting.
Thank you, Chairman, and good morning, ladies and gentlemen. I'm standing for re-election as a non-exec director of the Commonwealth Bank, having been on the board for a little over 2 years. I'm an Australian citizen. I'm currently resident in the United Kingdom. I'm a fellow of both the Institute of Civil Engineers and the Royal Academy of Engineering. My career has ranged from property development, investment management, infrastructure construction, including the delivery of the infrastructure and venues for the London 2012 Olympic Games, being accountable for the safe operation of the UK's national rail network, and in Australia being CEO of Lend-Lease from 1995 to 2003. I'm currently chair of the company that's tasked with delivering the 500-kilometre high-speed rail network throughout the United Kingdom, which has a capital value of some £60 billion. In these roles and over my 35 years in business, both in Australia and overseas, I've recognised the critical role that leaders of organisations have in fostering organisational culture. Leaders who are seen not just to speak about ethical behaviour, but to live it. Leaders who, through their actions, encourage an organisation to be open, innovative, and honest about what they get right and what they get wrong. Over the last 2 years on the board of the bank, I've learned a lot about the business and the markets in which we operate, and I now think that I can help the bank be an organisation that balances the needs of the public, the obligations of the shareholders to be in a transparent and accountable way. The reasons that attracted me to join the board of the Commonwealth Bank not only reinforced during my period as a board member, I look forward to be able to contribute to the future of the bank and a proud record of this organisation. Thank you.
Thank you very much, David. Thank you. The matter is now open for discussion. Ladies and gentlemen, microphone 3, please.
Thank you, Mr. Chairman. I'd like to introduce John Campbell, who is a shareholder.
Mr. Campbell, good morning.
On behalf of the Australian Shareholders Association, it's normally our position to challenge the re-election of chairs of remuneration committees. When we decide to vote against the remuneration report, it seems logical that one thing should follow the other. Sir David, I notice, has only recently taken the chair of the Remuneration Committee, and therefore there may be special circumstances that apply in this instance. But we see the chair of the Remuneration Committee as being like the opening batsman, standing against the onslaught of the executives to gain better benefits for themselves as against shareholder interests. And we think that this year there's been the odd ball that slipped between bat and pad. And I think that if it would be appropriate that we ask Sir David why we should re-elect him on that basis, that We've had a remuneration resolution, as I understand it, withdrawn from the agenda. We have a vote against the Remuneration Committee, and we're seeing a trend towards soft measures of soft hurdles being introduced, which are entirely discretionary, really, to judge executive remuneration, and we don't like it. We want to see the shareholders' interests being protected by the Remuneration Committee and being focused on long-term monetary benefits for shareholders, as opposed to the soft measures such as diversity, culture, etc. Sir David was a chief executive himself, and I'm asking really whether he has been able to put aside his past experience as a chief executive when taking on this role and looking at shareholder interests first.
Thank you for your question, Mr. Campbell. I quite like your cricketing analogies. I'm not sure quite where the batting order everybody sits, but I do like it, being a great follower of the game myself. As you rightly say, David's only very recently taken over as chair of the Remuneration Committee. But having said that, we have said that we are going to be talking to shareholders about all of our remuneration schemes, the short-term remuneration scheme and the long-term incentive scheme over the past 9 to 12 months. And it will be our intention in whatever schemes we have and however we configure the schemes to have objective and easily measurable criteria in respect of the targets that we set. I am going to just make one point again, which I made earlier, and you may or may not agree with it, but I feel very strongly that that one of the best ways of communicating a target through an organisation, and this certainly was the case with customer satisfaction, is to have it as part of a remuneration structure, because it cascades down through the organisation such that everybody understands what is important, what is critical today for an organisation. And you know, wherever we end up after we talk to you, all of you, our shareholders, in the next 12 months, I think one should be mindful of the fact that elements included within a remuneration plan don't only remunerate executives, but are an incredibly powerful tool for communicating what is important and what the board thinks is important for an executive and general team within the bank.
Okay.
Thank you.
You're not going to ask Sir David to address my questions?
No, I think we have absolute support in Sir David and what he's going to do, and I don't think a question and answer with David is appropriate. Thank you. Are there any other questions? Good. Ladies and gentlemen, I now put the resolution to the meeting. You should now mark your voting card in relation to Sir David Higgins' re-election. For your information, displayed on the screen are details of direct votes and proxies received in relation to the re-election of Sir David Higgins. The next resolution is for the re-election of Mr. Brian Long, who, in accordance with the bank's constitution, retires and offers himself for re-election. Brian has been a member of the board since September 2010 and is chairman of the Audit Committee and a member of the Risk Committee and the Board Performance and Renewal Committee. Brian will now address the meeting on his candidacy.
Thank you, Chairman, and good morning, ladies and gentlemen. And I must say at the outset that the last 6 years I have enjoyed greatly serving as one of your directors. And can I take the personal liberty of saying that I'm delighted to be here in Perth for this CBA AGM for a reason in particular, and that is Perth is the place in which I was born and educated. It's also the place where I commenced my professional career of over 40 years with the accounting firm EY. And although it's now some time ago, more than I care to remember, that I attended the North Perth State School for my primary school education, and one of my very early memories was the Commonwealth Bank officer coming to our school from the North Perth branch to enable school banking. And I'm sure there are many here today who would have similar memories, and even though those accounts weren't called Dolomites, as one of the shareholders mentioned earlier, but the principle was the same, and that was encouraging young people to the values of saving So 2 shillings a week into my account seemed like a lot to me at the time. And I often wonder, and frankly admire, how with 5 children in a working class family, my mother managed to find the extra 10 bob a week for the banking that built the saving discipline into those in my family. So as to my role here at the bank, as the chairman mentioned, my professional life was with the accounting firm Ernst & Young, starting here in Perth, then in Sydney, and then in a number of overseas locations. I worked through my career with major public companies, and my specialisation, amongst other things, was the accounting systems, the financial reporting, the control environments, risk management systems. I believe strongly in continuous improvement as a key element of success, and in my capacity as the Audit Committee Chairman, I'm absolutely committed to my part in achieving the continuous achieving the continuous improvement and supporting management in the board in that objective. It's been both a pleasure and a privilege to work with my fellow directors and our committed management team in what has been a time of great achievement for the bank. Achievement that has not been without challenges, and I'm personally very proud of the way our management and our people have turned their mind to ethically dealing with those challenges. If you so decide, I look forward very much to continuing to serve you, the shareholders of this great company.
Thank you, Brian. The matter is now open for discussion. Ladies and gentlemen, if there is no discussion, I now put the resolution to the meeting. You should now mark your voting cards in relation to Brian Long's re-election. For your information, displayed on the screen are details of direct votes and proxies received in relation to the re-election of Brian Long. The next resolution is for the election of Ms. Kathryn Livingstone, who, in accordance with the bank's constitution, retires and offers herself for election. Kathryn Livingstone has been a member of the board since March 2016 and has been selected by the board to be the chairman of the bank following my retirement at the end of the year. She is also a member of the Audit Committee. I now invite Kathryn, please, to come and address the meeting on her candidacy.
Thank you, Chairman, and good morning, shareholders. It's an absolute honour to have been invited to join the board of the Commonwealth Bank of Australia and to stand for election as a director today. The Commonwealth Bank, as many people have commented on this morning, has a special place in the history of Australia and has made a substantial contribution to the fabric of Australian society over many decades. I've been on the board since March this year, and as the Chairman mentioned, I'm a member of the Audit Committee. And in my brief tenure on the board, I have been extraordinarily impressed with the calibre of the management team and the openness and the transparency with which issues are addressed. In terms of my experience, I'm a chartered accountant and spent most of my executive career in the field of high technology implantable medical devices, including 6 years as CEO of Cochlear Limited. Since then, I've served on the boards of 6 ASX-listed companies, including as chairman of Telstra Corporation, of 2 significant government organisations, including as chairman of the CSIRO, and of a major cultural institution. I've also had extensive involvement in the policy arena, having worked on government reviews at both the state and federal level, and I've had engagement with multiple regulators. In terms of the experience that I bring to the board, I think there are 3 main aspects. The first of these is more than 15 years' experience as a non-executive director, including 12 in a chairman role, and through that, a deep consciousness of the role of the board in terms of governance and stewardship. Second, I have experience with companies facing dynamic and fast-changing environments, including fundamental changes in customer expectations. And finally, I believe I bring an awareness of innovation and technology and its role in business model evolution, as well as its disruptive potential and risks. Should I be elected today, I look forward to serving as a member of the board to advance the interests of the bank and of you, its shareholders. Thank you.
Thank you very much, Kathryn. The matter is now open for discussion. Ladies and gentlemen, as there is no discussion, I now put the resolution to the meeting. You should now mark your voting card in relation to Kathryn Livingstone's election. For your information, displayed on the screen are details of direct votes and proxies received in relation to the election of Kathryn Livingstone. The next resolution is for the election of Ms Mary Padbury, who, in accordance with the bank's constitution, retires and offers herself for election. Mary Padbury has been a member of the board since June 2016 and is a member of the Remuneration Committee and the Board Performance and Renewal Committee. Mary, I wonder if you could please come and address the meeting.
Thank you very much, Chairman, and good morning, ladies and gentlemen. As the Chairman said, my name is Mary Padbury. I'm currently a partner and Vice Chairman of international law firm Ashurst. My legal career has spanned 35 years and included working as an intellectual property lawyer in Australia and London in seeking to protect or secure access to technologies across many sectors, including life sciences, mining, IT, manufacturing and media. This has afforded me the privilege of working closely with the senior management teams and R&D departments of global corporations whose business models are based on the need for continuous innovation in serving and, in many cases, defining client need. I've also worked in the commercialisation of technology and legal aspects of branding and marketing more broadly. For the last 20 years, I've played a leadership and governance role which has included P&L responsibility for a significant part of the legal practice, client relationship management and chairing the Australian Partnership, including the Remuneration Committee, for 8 years. I also led the Australian firm's merger discussions, which culminated in the formation of an integrated global firm in 2013. In my relatively short period as a member of the board, I've been enormously impressed by the high calibre and openness of the management team and the balance achieved by the board in focusing on performance, strategy and risk management, and most importantly, culture, which necessarily underpins the bank's sustainable success. I have enjoyed enormously my brief tenure to date as a Director of the Commonwealth Bank of Australia and would be very privileged to continue to serve if you so decide. Thank you very much.
Thank you very much, Mary. The matter is now open for discussion. Ladies and gentlemen, if there is no discussion, I now put the resolution to the meeting. You should now mark your voting card in relation to Mary Padbury's election. For your information, displayed on the screen are details of direct votes and proxies received in relation to the election of Mary Padbury. The next item on our agenda is item 3, the resolution to adopt the Commonwealth Bank's remuneration report for the year ended 30th of June 2016, and I'll ask David Higgins, Chairman of the Remuneration Committee, to rejoin us on stage, and he will assist us in responding to any issues relating to the committee which may arise in discussion of this item 3. The remuneration report is provided to shareholders in the 2016 annual report. I referred earlier to the executive remuneration and the changes to the long-term incentive plan. I want to assure you that the board is absolutely focused on a remuneration approach that delivers sustainable long-term performance which will exceed the expectations of all of our stakeholders. You, our shareholders, our customers, the people, and the community. Our approach underpins the importance of the bank's vision and values and reflects our commitment to innovation and to progress. The board always welcomes the views of shareholders, and I said earlier we recognise that the significant proxy vote against the remuneration report clearly indicates that some shareholders have concerns about our reward plans. While we firmly believe that the right balance of financial and non-financial performance measures will deliver both superior and sustainable value for shareholders over the long term, we will, of course, engage with shareholders to take their views into account over the next year on this and, of course, on a number of short-term incentive issues. Now, are there any questions in relation to the remuneration report? Microphone 3, please.
Thank you, Chairman. I'd like to introduce John Campbell, who is a shareholder.
Ah, Mr. Campbell, welcome back.
I think you'd be disappointed if I didn't.
I would have been surprised.
First of all, can I query what you told the meeting earlier on about resolution item 4, the grant of incentive rights to Mr. Ian Narev? I heard you say that you were going to consult, and I applaud that. But I heard you say that you were going to grant him the number of rights that were stated in the notice of meeting, despite the withdrawal of the resolution. Is that? Are you proposing to hold an EGM on that topic, or how are you going to handle that?
No, we're not. I'll tell you exactly what we're going to do, Mr. Campbell. The plan under which Mr. Narev will be awarded the rights is the plan that was approved by shareholders in 2015 and still stands as a plan. And he will receive the reward rights under that plan. The number of rights he'll receive is simply the number that is in the notice of meeting for this meeting. So that's how it's going to be, because the issue is not so much whether or not he gets an award, but it is that the agenda item 4, which now no longer exists, related to the plan that was outlined in the remuneration report, and we've decided not to implement that plan pending further discussion with shareholders.
Fair enough. Well, it is the remuneration report that's in the annual report that we're required to vote on. So my comments are directed at the content of that report. There are a number of areas. You have mentioned the structure of the long-term incentive. That's the first area of concern, that the bank changed the arrangements for the incentive to have a 75% weighting for financial hurdles, removed and replaced by a 50% weighting, so a reduction of a third of the financial hurdles. Of those financial hurdles, half of them are awarded on only 3-year performance appraisal period, not our preferred 4-year appraisal period. The customer satisfaction hurdle is assessed on 2 short-term 2-year periods. Presumably that's to limit the impact, is it, of the negative publicity that has been recently generated by the financial planning and CommInsure problems. The remainder of the award is assessed on, was to be assessed on soft measures styled people and community. 25% of the award to be assessed on diversity, inclusion, sustainability and culture. Inherently, those are discretionary hurdles, and we see that as a retrograde step, because we want to see the CEO focused on monetary benefits for shareholders in the longer term, and we want to see that on a long-term basis, not 2-year term. There are other aspects of the remuneration report that we don't like either. There's the use of fair value, which you also commented on, to compute the entitlement by dividing the amount of fixed pay, which 100% of the fixed pay for the reward. We don't quibble with that, but you divide it by the discounted amount of the shares rather than the market value. If you divided it by the market value, well, the fact is that results in the market value of the rights being awarded being 4 million instead of 2.6 million being Mr. Narev's fixed pay. Other aspects, we see that the short-term incentive is paid entirely in deferred shares, in cash, rather than what we want to see as at least half of it in deferred shares. We want to see a holding lock on the vesting of long-term incentive rights, and we want to see the basis of determining the completion of hurdles being statutory measures rather than any non-IFRAs, to use the term, but you use the cash basis of determining profits. We want to see statutory measures being used. So hopefully you will be consulting your retail shareholder base through our organisation, but should you not do so, those are the areas that we wish to see amended in your plan. In the meantime, I'd urge on the shareholders here today to express their views in voting against the plan, which we see as unsatisfactory from a shareholder point of view.
Thank you for your comments, Mr. Campbell. We will be consulting widely.
Thank you.
Microphone 2, please.
Thank you, Mr. Chairman. Mr. Paul Fanning has a question.
Mr. Fanning.
Thank you. Look, I'm picking up a little more on the REM report in regard to, well, effectively item 4, which has been withdrawn. But my question to executive manager and the board is, well, how was the composition of the 2016 award scheme derived? Like 50% award will be subject to performance hurdle ranks on TSR, 25% will be ranked on company's customer satisfaction, and 25% will be awarded on people and community performance. Did you go out to a consultancy to seek advice? Did you look at what other banks are doing here in Australia and perhaps Asia? Can you please enlighten us?
Yeah, sure. I'd be delighted to, and then if David wants to add anything, he certainly can. I mean, of course, it's now all over for discussion. We'll be talking to shareholders about it. So, to an extent, it's not an issue. This is not an issue now. But you're asking about how we arrived at it. I don't think any other bank's done it at all. And it's certainly been in sort of gestating period for probably about 18 months, I would imagine, and within our bank. And a part of it is how we see the bank evolving over the next 5 to 10 years. Financial institutions aren't going to be what they are today. They'll be different. They'll be different in terms of technology, how they're constructed, how they serve their customers, how they interrelate among themselves. It is critically important for this bank that in 5 or 10 years' time we actually have a bank that can appeal to the whole of society. We want the best people to come and work for the bank, and we have to institute changes of behaviours, changes in the way in which the bank operates to ensure that that comes to pass. That also includes being proud about what we do in terms of sustainability. You've heard of all the comments. You might not agree with them, but you've heard comments on climate change today. And that is just one single small ingredient within it all. As we look at how the bank is, how attractive the bank is, how the bank behaves, sustainable success is not a binary issue of whether you make X profit or Y profit on a particular day of the week, because that doesn't encompass how behaviours change and how an organisation will evolve. And that's what we were trying to do. And that's one of the things we'll be talking to shareholders about. But as I said, it's not on the table right now. Okay. But thank you for the question.
Just on when, in terms of talking to shareholder bases, will you be talking to more than institutional and fund managers?
Yes, we will.
Okay.
Yeah, thank you. Ladies and gentlemen, through no further discussion, I now put the resolution to the meeting. For your information, displayed on the screen are details of direct proxies and votes received in relation to the remuneration report. I now ask you to mark your voting card in relation to this resolution to adopt the remuneration report. Based on direct proxies and votes received, we will receive a first strike on the remuneration report. And as I said earlier, we will, of course, discuss this with shareholders over the course of the next 12 months. Now, as announced on the ASX this morning, and as I have explained earlier, Resolution 4 has been withdrawn and will not put it to shareholders today. Proxy votes indicate this resolution would have passed with 54% in favour, but as I said a moment ago, we know that shareholders express concern about changes we've made to the targets in the long-term reward plan, and we therefore further engage and talk further. Now that we've completed discussion on all the resolutions contained in the notice of meeting, would you please be sure that you've marked your red cards correctly so that you can put them in the boxes at the end of the meeting. If you need any assistance with the completion of your voting cards, representatives of Link Market Services are available in the room to help. Proxy holders should note that all directed proxies have been accumulated and recorded. If you're a shareholder and a proxy holder, it's important that you complete 2 voting cards, one in your own right and the second as a proxy. The results of the voting will be released on the ASX and on the bank's website later today. Counting of the votes will be undertaken by Link Market Services, and Mr. Marcus Laithwaite, PricewaterhouseCoopers, will act as an observer for the poll. The poll will close 15 minutes after the end of the meeting, and we would all be delighted if you join us and the group executives for refreshments afterwards. Thank you all so very much indeed for coming. Thank you.